Hello, everybody, and welcome. Welcome to Spark Reynolds Facebook Live, podcast, and YouTube. We are really excited about today's topic. We are going to discuss what the heck is private equity in real estate investing. And I know a lot of people have questions about it, and it's a term we hear more and more as time goes on. So, with that being said, let us know where you're joining us from. Just pop it in the chat or any other notes, questions, say hi, whatever. Just throw it in the chat. So with all this, Brian, let's start with the real basics. Can you just, what is private equity?
Yeah, well, it's one of those terms that gets thrown around that normal people, middle class people, average Americans don't know what it is, and they think it's scary and intimidating. They think it's something that's a rich person thing. So it's not any of that stuff. It's actually really simple and easy to understand. So on the most basic level, private equity is just ownership, right? An equity interest in a company that is private, right? That's not publicly traded on a stock exchange. So you are investing in an ownership interest, in an equity interest in a private company, right? Private equity. So it's not scary. It's not intimidating. So the classic example of private equity investing is they buy a company, they infuse a bunch of new money and new talent into it, grow it aggressively, and then they sell that company a few years down the line for a big profit after they've grown it, right? So that's kind of the classic example of private equity investing. Now, there are a bunch of different types of private equity investments. Venture capital is a type of private equity investment, right? Where a venture capital group will go out, they'll invest money into a startup and help it grow quickly, and then sell out their ownership interest in that startup. So that's venture capital. That's different from the example we gave a few minutes ago, which was a mature company, not a startup. Hedge funds are an example of private equity investing. So these are flexibly managed funds that go out and buy anything really that the fund manager is interested in, but then they try to reduce the risk of some of those higher risk investments through hedging strategies, things like short selling or derivatives, options, futures. These tend to be very, very actively managed funds, so they have really high fund fees. They're not necessarily low risk, but they're out there pursuing high returns. So that's one other example of private equity investments. Now, Denny, we're talking about real estate private equity, and that's where we want to spend most of today talking about. So real estate syndications are an example of private equity investing. Real estate funds are also an example of private equity investing. So let's talk about the two of those because that's what we're here for, right? So
Right.
Real estate syndications, you are buying into either a single property or a small portfolio that includes a couple properties. It's a clearly defined deal, right? You're buying one property or you're buying like this portfolio of two properties or three properties. You know exactly which properties you're buying into, and you are buying into basically an ownership share in these big properties. Like you said, Denny, it could be an apartment complex, right? Could be some other type of commercial real estate, mobile home park, self-storage facility, industrial real estate, retail real estate. Could be any of that stuff, but you're basically buying in as a fractional owner in that property or small portfolio of a couple properties.
Right.
Now, a real estate fund is different. These are typically open-ended funds with rotating investments. So the fund manager raises money and then buys properties and holds them for a few years and then sells them for a profit and then buys new properties. Or it could be a closed fund, but a blind fund where the fund is planning to exist for 5 years, 7 years, something like that. But you don't know what it's going to buy before you buy in. You're buying in based on the fund manager's reputation, right?
Right.
And then after they've raised the money, then they go out and find ways to invest it. They buy properties, whether those are apartment complexes, like we said, or other types of commercial real estate. But real estate syndications, you're buying a specific property or a couple specific properties. With funds, you typically don't know the exact properties you're buying into. The fund manager will then take your money and go out and buy properties based on certain criteria that you do know about in advance, right? Like maybe it's a self-storage facility fund and they're buying self-storage facilities in small towns in the Midwest, right? You don't know exactly which small towns, but you know it'll be a small town in the Midwest where they're buying self-storage facilities, right? So what are the upsides of private equity investments? Well, high return potential, right? The idea here is that they're trying to beat the stock market, beat those 8 to 10% historic returns that the stock market delivers, and diversify away from the stock market, alternative assets, alternative businesses. So those are the advantages, the upsides of private equity investments. There are some risks and some downsides, of course.
Always.
These are not typically liquid investments. Once you put your money in, it's usually locked up for a certain period of time. These are
How long
medium,
of a time usually could that be?
Yeah, so medium to long term, often like 2 to 7 years. So that's common for these, especially for real estate syndications. But it does vary based on the type of private equity investment, type of deal, what you're investing in. High minimum investments in many cases. So often 50 grand, 100 grand, sometimes more. It could be $1 million. So that is something to consider with these. And most private equity investments only allow accredited investors. So wealthy investors, investors with very high incomes or net worths over $1 million, not including equity in your home.
Right.
So, those are some serious risks and downsides to these. Now, there are some ways around those downsides. And, this is what we're going to be talking about next week. We are doing a 5-day.
What's next week?
Well, thank you for the tee up there, Denny. I appreciate it.
Sure.
So Denny and I are doing a 5-day Fast Track to Freedom challenge next week, focusing largely on group real estate syndication deals and how you can invest in them with smaller amounts of money than that typical 50 or 100 grand that's usually required. And why go through the hassle of trying to invest in these? Because the returns are often very high, 15 to 30% or more returns on these. Often, not always, of course. There's risk in any investment, but that is what we are aiming for when we invest in private equity real estate syndications. We only invest in deals that do allow non-accredited investors, so
Right.
middle-class investors, normal people, people who don't necessarily meet those high net worth or high income requirements. So it's going to be fun. And not only are we going to talk about the nuts and bolts of investing in these passive group investments, but we're also going to really talk about how to use these investments and these passive income streams to start living your ideal lifestyle today, not in 10 years from now, not in 20 years from now, not when you retire, but using these higher returns and these strong streams of cash flow to start living your ideal lifestyle today. And so it's going to be.
And you don't have to deal with the day-to-day management stuff.
Oh yeah, none of those 2 a.m. phone calls from tenants. These are completely passive investments, which we love. It's a great way to diversify from the stock market and also diversify away from your rental properties, your single-family rental properties, if that's something you invest in as well. So it's a 5-day challenge, 1 hour a day. We're meeting at noon Eastern every day next week, and it's totally free. We're going to share in the comments here the link to where you can register for this. Denny and I will also be available for a private Q&A after each session for VIP attendees. But it's going to be a lot of fun. We're going to drill into both the kind of nuts and bolts side of the investment, but also the more mindset shift side about lifestyle design and pursuing your ideal work and using these streams of passive income to supplement your salary and your active income. So it's going to be a great mix of kind of the hard stuff, the nuts and bolts investment stuff, and the softer skill, the mindset shifts. We're going to be combining both of those together. So, Denny, what did I miss? What else should we cover here before we wrap things up?
I think you got it, Brian, but I'm very excited about this. And I think that when you guys hear some of the nuts and bolts, you're going to be as excited. there's so many barriers to entry to a lot of this stuff, and I think
If
that
you invest by yourself.
right.
Yeah.
So this is
So we're gonna show you how to get around those barriers to entry.
exactly.
Yeah. So we'll dig into things like tax benefits of real estate syndications. We'll get into infinite returns, which is awesome. How to recycle your same investment capital over and over and over in different properties and different deals. It's gonna be a lot of fun. So we kick off August 21st. It's a free 5-day challenge. It's the most comprehensive free educational experience that we've ever offered. We've never offered something this big for free. So we're super pumped about it. We will see you next Monday, August 21st, 12 Eastern, 9 Pacific.
And the link is in the comments. No, just excited.
All right. Well, again, we have the link in the comments here. Reserve your seat. We'll see you on Monday at 12 Eastern. Bye, guys.
See you then. Bye-bye.